Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. Donald Trump is set to lament Jerome Powell's decision to not give in to easy money. Reliance Jio adds nearly 1 crore connections in June. Idea Cellular beats others to capture the second spot. India's aviation industry registered a 21% growth in passenger traffic for the month of July, led by market leader Indigo, whose passenger growth is the highest in 18 months. The central government may ask public sector units to transfer non-core assets to special purpose vehicles for faster disinvestment. That is a Bloomberg Quint exclusive. Well, that and lots more lined up on the show today. It's a packed morning, a lot of stocks which will react, so lots to talk about as well in the session today. But let's just first talk about what the markets did in trade yesterday. Now, our indices resumed a record-breaking run. It was a very good start to trade yesterday, and we only built on from gains there. So about 0.7, 0.8% for the Nifty, the Sensex almost 0.9%. And what they did was just shift the level in the minds of the traders, at least for the current series, a notch higher. So from 11,000 to 11,500. Now, if we just look at the maximum concentration for open interest on the option side, it is wedged around the 11,600 call option as well as the 11,400 put option. So as the range shifted decisively, we never know. But yesterday, the put prices for a lot of lower strikes came off quite rapidly in the session. The Nifty Bank, though, underperformed despite the HDFC twins gaining in trade. So while the Nifty and the Sensex did what they did, the Nifty Bank was underperforming just about 0.5%. And mind you, there was some serious delivery-based buying in select heavyweights. I spoke about the HDFC twins. Just look at what's happened there. This is the percentages, about 250-300 crores worth of buying in each of these stocks seen. But Reliance Industries about 49%, HDFC Bank 61%, HDFC 71%. Kind of a delivery-based buying. And after a long time, I saw both the HDFC twins move up in tandem and stay up for most part of the trading day. So that is an interesting bit. In fact, since the time the rally started from June 28th onwards, when the June series ended at the low, I think we've had a fabulous move, and we'll talk about that a bit later on. But this was an interesting piece of action that we saw in the session yesterday. Now, what's to be watched today? Aside of course, what the key levels on the indices and the Nifty Bank are, a couple of very interesting numbers come out, Motilal Oswal as well as HDFC AMC. So more importantly, that one should be interesting to watch out what this one does in terms of its first delivery post getting listed. 1747, HDFC AMC. Let's see, it saw a bit of buying yesterday. I think the earnings could well be an important one to watch out for. And of course, we'll watch out for what's happening to the HDFC twins, what's happening to Reliance Industries, and what happens to L&T, because that was one big mover in trade yesterday. However, stocks that you should watch out for at 9:15, aside of aviation stocks and aside of telecom stocks, which I'm sure Somit will talk about in big detail in moments from now. Some other key names to monitor. Avenue Supermarts could be an interesting one, nudging new highs almost every single day. Credit Suisse has initiated coverage with an underperform rating, target price of 1150. You know, typically all through these months when we've seen brokerages come out and speak about how overvalued the stock looks, it just shrugs off and keeps on moving ahead. This time it's Credit Suisse. Let's see if there's an intraday reaction that we see in Avenue Supermarts. Very low free float, I really doubt, but you never know. Apollo Tyres, we've spoken about multiple stocks getting impacted. Their production operations in 2 plants in Kerala have been disrupted. The loss is estimated till date at about 1,500 MT. They've come out with this release. Let's see if there's some pressure on Apollo Tyres today. FDC, they received 8 observations under Form 483 for Aurangabad unit from the US FDA. The observations are related to ophthalmics products being exported to the US market. Could see a reaction today. Do watch out for this one. Last but not the least, yesterday we were all wondering as to why is it that Vadilal has had such a sharp downtick. It was locked on a lower circuit, down about 20%. Now you know the reason. In the bulk deal data yesterday, Ashish Kacholia has sold over 3 lakh shares. That's nearly 5% of the equity of the company. He held about 7.2% earlier. Sold off about 5% odd. No surprise that the stock went off because there was some heavy selling that came in. 3 lakh shares is no mean feat, plus the name that was associated, and because of that, let's see if there's more pressure in Vadilal in the session today. This could be an important monitorable too. Not too many people own the stock, of course, but an interesting stock, and always interesting when a stock falls about 20% in trade. So that's the nature of stocks, and as I said, a lot of stocks to monitor in the session today. But let's talk about First Word and what's lined up on this segment. Remember, it's a collection of the top editorial stories that we believe we should bring to you starting up on the show. There's no stopping Reliance Jio from adding new customers, but Sumit will tell us why Airtel won't be too unhappy with the June TRAI numbers. Investors in the mid-cap and the small-cap stocks will also have a smile on their faces this time around. We'll dwell on that for a bit. Darshan is going to tell us what's adding sheen to AIA Engineering's performance. And Reliance Jio, while it continues to add more subscribers, the newest telecom operator has added close to 1 crore new connections in June. That's 30 lakh more than its closest peer, which is Idea Cellular. But it sees Airtel. It seems that Airtel has lost out on new additions in June. However, Sumit, if I read it correctly, Airtel doesn't have too many reasons to be unhappy as well. Now break it down for us, and what does this mean for each of the subscribers?
Well, if you see the first chart that is there here, now Airtel on a net basis added only less than, in fact, 11,000 subscribers in the month of June, while the other operators in that period added, Vodafone added close to 2,75,000. Idea added 63.7 lakh subscribers, while Jio added close to 97.1 lakh subscribers, and Airtel only added 11,000 subscribers, less than 11,000. However, when it comes to the active subscriber base, now that has increased the most for Bharti Airtel. Bharti Airtel's active subscriber base has increased by 1.5 crore subscribers, while that of Reliance Jio has increased by only 59 lakh subscribers. So this is the main reason why Bharti Airtel won't be unhappy because of lower net subscriber addition. And if you see for Idea and Vodafone, their active subscriber base has again come down for the second consecutive month, and compared to last month, in the month of June, it has come down by around 11 lakh subscribers for Vodafone, and for Idea Cellular it has come down by 22.6 lakh subscribers. Now if you see, this has increased, the number of active subscriber has mainly increased because of higher active subscriber ratio. Now that has increased for Airtel to around 99.8% from 95.3% in the previous month. In fact, Airtel was the only subscriber to see a rise in its active subscriber ratio. For Vodafone India, it has come down to 93.5%. For Idea Cellular, it has come down to 92.2% from 96%. And for Reliance Jio, it has yet again come down to 82.5% from 83.6% reported by the company in the last month, that is June 2018. Now this active subscriber ratio, now a higher active subscriber ratio does not necessarily mean a higher revenue generating subscribers, but it at least indicates that the customers are frequently using the network and the chances of losing out on the customers are low. So that is the reason why active subscriber ratio is important for the telecom operators. Now on the market share front, if you see, Airtel's market share, Airtel has been fortifying its market share. Airtel's market share has yet again increased, and in the month of June 2018 it stood at 34.3%, while for Reliance Jio it has increased by only 20 basis points and it has close to around 17.7%. For Idea and Vodafone, the market share has yet again come down, and in the month of June it was around 20.8% and 20.3% compared to 20.9% and 21.3% in the previous month. Now if you see in this 4G subscriber addition pace, now that is the important one for the telecom operators. Airtel has yet again outperformed Vodafone and Idea Cellular in that space. 4G subscribe, Airtel added close to 3.72 million 4G subscribers. That is more than what Vodafone India and Idea Cellular combinedly added in the month of June. Now we are not showing the Reliance Jio numbers here because for Reliance Jio all the subscribers are 4G subscribers, so the net addition is the total 4G subscriber addition. Lastly, on Reliance Jio's new venture, that is the home broadband space. Now there has been not much movement here. The subscriber addition in this space has also remained stable. In fact, it has come down compared to May to close to 17.9 million subscribers. In the month of May, it was close to 17.94 million subscribers. Also for 2018, if you see, it has remained largely stable at around 17.9 million subscribers. So not much of movement in this home broadband space. That is the new venture of Reliance Jio. So not much movement in this space. Very interesting.
So Amit, just one follow-up question. Can this data be extrapolated safely? Or I would presume it will be foolhardy to do so, but are there trends emerging over the last 7 or 8 months which are kind of indicating something as a result of the numbers that have come out this month?
Well, the trend has been a bit fluctuating. There's no specific trend that we can see over the last 12 months. I spoke to a few analysts. They are saying that we'll have to wait for another 6 more months or 8 months to see how the trend is going. But as of now, the trend is that the active subscriber ratio for Airtel has been increasing. For Vodafone and Idea, it has been decreasing. For Reliance Jio, it is fluctuating. Sometimes it is close to 86%. Now it has come down to 82.5%. So there's no stability on that front. So we'll have to wait for another 6 or 8 months more. That's what the analysts are saying, to see a trend, how it is going to pan out for the telecom operators.
You would presume no clear winners or losers as a result of this data?
For the month of June, I would say Airtel was the clear winner because of more active subscriber in this.
But it's not conclusive anyway.
It's not conclusive
for a trend. Okay, great. Sumit, thanks for putting that into perspective. Well, that's the telecom race, and we keep on giving you these updates, but it's very difficult to figure out what's a long-term trend that's building up on the basis of not just the June numbers, but over the last 6-odd-month numbers as well. Similarly, for the Indian markets, they have been consistently hitting new highs over the past few days. The recovery, one could say, started from June 29th. Remember, June 28th was the end of the June series when the markets came off. From there, we've almost seen a consistent uptick. What's changed, though, is the texture of the rally, with small and mid-cap stocks making their way back into the green. Now, look at this. Since the close of June 28th, the Nifty's gained 9%. And while everybody may say the mid-caps and the small caps are getting battered, look at the indices and their performance. The BSE mid-cap index is up 8.3% in the same period. The small cap index is up almost 8% in the same period. So almost neck to neck. Yes, in the first 6 months, maybe the mid-caps and the small caps lost out. Post that rally, post that period, which is the July and the August period, we've seen the mid-caps and the small caps too making a fairly smart comeback. What's also changed is the texture of the components in the Nifty. So if you just look at the gainers and the losers from June 29th, and this is the chart on your screen, you will see while Bajaj Finance was anyways a favorite, and because of the good numbers it gained about 24%, the next set of stocks, both on the gaining and the losing side, the top gainers were stocks like ICICI, Axis, SBI and Yes Bank. Corporate-facing banks amongst those names which formed a prominent part. I'll add a Bajaj Finserv here. You had 6 financial-related names powering this rally up. At the same time, on the downside, we didn't have Kotak Bank performing at all. It was down about 4.8% in the same period. HDFC Bank was down about 1.6% in the same period. And Eicher Motors, clearly a darling as far as the consumption, pseudo-consumption space goes, also down about 0.15%. So 9% uptick for the Sensex. Eicher, Kotak, HDFC Bank, not a part of that rally. That's the change that we've seen in the texture of this rally. But what this has done, amongst other things, is make an expensive market even more expensive. Now, one is the Nifty PE chart, and yes, in this decade, this is the highest PE multiple as per the Bloomberg consensus estimate that we are trading at. But let me try and become a bit more analytical. Let's get in a chart which shows the earnings yield versus the GSEC yield, the comparison over the last 10 years. This is the chart. And if you look at the blue line, the turquoise blue line, that's the earnings yield of the Sensex. The white line is the GSEC yield. And the difference, which is at the leftmost corner of your screen, it's the highest since December, almost the highest since December 2007. Now, what does a chart like this tell you? Typically, when the GSEC yield were to move up further, you would want that the earnings yield of the market would too move up further, because the risk-free rate of return is now a lot higher. So you would want the markets to be stable and earnings to pick up in order to match the GSEC yield. What's happened in calendar year 18, at least in the last 6 odd months, until now at least, is that while the GSEC yield has moved up further and we are currently at 7.83 or thereabouts, the earnings yield has not. In fact, it's moved down further. Presumably because, one, while the markets are trading at new highs, the earnings still now haven't shown a sign of a meaningful pickup, save for quarter 1. So the earnings yield as of date is low, and the difference between the earnings yield and the GSEC yield, as I said, is the highest. It happened in 2007, December 2007. I'm not saying the same will happen now, but the point that I'm trying to make is it happened in December 2007, and we saw what happened. The technical correction that followed in addition to the fundamental correction was fairly severe. The markets do look a tad bit expensive if you just take this parameter into account. I know skeptics would argue that a large portion of this rally is fueled by consumption stocks. They are not levered, and therefore the composition of the Nifty or the Sensex is a lot different than what it was way back in 2007. But 35% of the weightage is also financials, and we have fairly leveraged sectors as a part of the Sensex even today as well. So Loosely put, both the Nifty P, which is at the highest level in this decade, as well as the difference between the earnings yield and the GSEC yield, do point towards some stretched valuations for the indices. Not that it's a surprise, but this chart really made me ponder over how much further room could last in this rally. You never know. The markets could remain irrational for a lot longer than you and I can remain solvent if we are on the short side. So be careful there. And, well, triggers are there in place for the rally to move up further, earnings being one key trigger. But let's wait and watch. Some parameters showing that we are a touch bit expensive. Could the same be said for AIA Engineering? Because that's touched a new high on Monday as well. The grinding media maker has a few factors that are working in its favor, especially as it's been able to get customers move on to the relatively expensive but more effective rollers platform. Darshan Mehta is standing by with the details. Now, Darshan, a lot of stocks hitting the new highs. Why is it that you've chosen to highlight AIA Engineering?
See, because there are a couple of things that have changed for AIA Engineering. The strategy has changed. The management tone has been aggressive. So what we've seen is that, this was a period of lull that we saw. The rally has been stupendous. It's almost at 1800. There was where the management was struggling. And here is post the numbers, and the management gave a rather strong commentary, and the stock has moved up to record levels now currently. So that is the thing. Just a quick word on, what the company does, and it is basically it makes high chrome grinding media. So those are those balls that are used in crushing a lot of raw material for sectors like cement, mining and power. So basically a lot comes in from the cement and mining, and you're seeing revival coming in both in the cement and mining sector, and that is something that has actually aided the growth of the raw material, growth of the product of AIA Engineering. So that's the first part. Now if you're looking at it, what are the prominent investors? First of all, a lot of prominent investors are there, and just to give a bring, Nalanda owns almost 9%, PineBridge owns another 5%, HDFC, AMC, Goldman Sachs, and the list goes on. So it's a company which has a gold standard of investors. So just that is the brief about what the company is and some of the prominent shareholders. Now look at the revenue trend. The top line has been growing from a 2100 crores in FY17 and moved to 2250. Now it's almost 2500 crore, and the first quarter they did almost 715. So if you annualize that, probably you will end up the year at almost over 2800 crores of top line. So no doubt the top line is growing. Now this is where it gets interesting. Look at the margin trend. From margins of 29%, it's been declining significantly, and now they did 22% in FY18, and they did 21.7%. Now the reason that the margins have come off significantly is that the company is looking to push volumes at the cost of cutting prices, and they have certain expansion that is there, and once the market gets converted, the market management believes that margins again will come back to levels of where it was earlier. So margins, the trajectory that the management has given is improvement in margins again to the earlier levels. Now looking at the profit, and because of the cost constraints, because of the pricing constraints that we've seen, even profit is taking an impact, but the management is hopeful that will come out. So it's been consistent at almost 47 crores. They've done 11.5 crores this time around, which will mean that if they improve, they will again come back to levels of 48 crores this time around. Now, a couple of things that we want to watch out, what's working for AIA Engineering. First of all, it is a debt-free company, net cash on the books, working significantly, and this despite an ongoing huge capex that they have. So they've done capex despite, and that at the same time being debt-free. Volume growth was seen in the first quarter. They grew at 13% volume growth. The street was anticipating 10%, despite record production that is there. So strong trend is coming. Now cement firms, a lot of mining firms are switching to roller mills and presses, for which the basic raw material is the product that AIA Engineering supplies. So that is doing well. Mining industry is seeing a big uptick both in India as well as globally. So that helps AIA Engineering. And finally, the last factor that pretty much helps is the fact that it's doing well. It's a dividend paying company since 2007 and pays decent dividends. So that is something that works for AIA Engineering. Apart from it, future margin trends, what is the management indicated going ahead? First of all, they are saying that stable ferrochrome prices are there, and that will aid margins going ahead. That will help them, and they have been stabilized. Volume rise, they expect volumes to rise even further now, so that will help them further. And weaker rupee is aiding exports. So no doubt they are already in a position where they are the lowest price producer. Now with the rupee weakening, they have the much needed advantage of going going in, getting the volumes, and products are still cheaper than the peers despite of all these things. So that is something that will aid margins. They're saying that they will go ahead at it. What will also help them is that, and what differentiates AI Engineering compared to its peers is that it's a very niche business. So it can customize products. So not a lot of people can come into this thing and switch, and they're looking to switch the raw material from high chrome, from the normal one to high chrome grinding media, and that is why they're looking to cut prices and switch the market to that side. So that's exactly what the management has said. What has the management said? They guide for a 40 to 50,000 ton of addition as far as volume is concerned, and they've given a capex guidance of 500 crores. So despite being debt free and cash rich, they are going very aggressive, and they are managing to cut prices and get the market for themselves. So that's the strategy as of now.
Is the sell side convinced?
Yeah, so basically the price has risen significantly, so it's at par with the Bloomberg consensus. But out of the companies that analysts that track, 10 of them have a buy rating, 6 of them have a hold rating, and 2 of them have a sell rating on AI Engineering. So the street seems to be convinced that the counter is a buy. If you're looking at some of the target prices that they are there, on the bull side you have Anand Rathi, which is expecting 2,500 crores, Edelweiss and Spark, all of them anticipating over of 2,000 crores. But on the negative side, you have Ambit, JM Financial, and Axis Cap. But nevertheless, the buy side is much more, buy ratings are much more on the counter. Valuations, no doubt, has turned expensive now post the big move that we've seen. On an FY19 basis, it's trading 33 times. FY20 is saying 7 times. And all the notes that have come out have always pointed out that, it's a great company, there's great prospect, but now valuations are demanding. But you can see what the management is trying to do, and that's what we've tried to highlight.
Great. Darshan, thanks for putting this into perspective. Please do look up the numbers yourself before you make a decision to buy or sell the stock. What we are presenting merely is the fact file of what the company is doing and what the management has to say in the very recent past. That's AIA Engineering for you. We end this piece, end this wheel with Kerala once again, where it's heartening to see so many volunteers stepping in and trying to help out in what will be a Herculean task to get the state back on its feet. So we spoke to some of the volunteers on the ground, and here's what they had to say.
We have things like shelter boxes and all, which is designed by Rotary International. Already one consignment of 200 shelter boxes have been shipped from Calcutta. These are very sturdy boxes which contain everything that one household may require to start their life there. Things like a tarpaulin, tent, mosquito net, containers, lot, everything in one metal trunk. So it's a long-drawn plan which we have, and we are going to sit with the administration also maybe in a couple of days' time.
The rain stopped, where people trying to go back to the houses, where they found that no sewage has mixed with the drinking water because of the stagnant of water, maybe malaria, all kind of dengue, all kind of such diseases. Maybe we have to be proactive.
We are looking for chlorination tablets, for instance, to purify water. Because a lot of people, a lot of the wells in all of these places have been entirely contaminated. So before we can use any of this water, we can't keep depending on people sending in bottled water from places. So when we start using well water, we want to be completely sure that it is safe. We're also looking to clean these places completely. In fact, volunteers have been signing up to clean these houses and areas thoroughly before we allow people to go back home.
.6 million people are Now, in the relief camps, there are around 3,446 relief camps across the state because their houses have been completely destroyed and the roads are completely devastated. We have to first concentrate on rebuilding the homes, that too disaster-resistant homes we have to think of rebuilding, and then only we will be able to shift them back to safety.
Brought Kochi back to the air map. A lot of hard work has gone in by all the stakeholders, whether you call it the state administration, the Cochin municipality, then AIA people came, the CISF, the Air India people, all the flights which we can accommodate, that is, the size of the aircraft cannot be more than a Boeing 737 because of the restricted length of the runway at Kochi. So the only problem which we are facing is the runway shortage and all the infrastructure for handling passengers. But in emergency, it is being done.
Remember, if you are still looking for an avenue to make a donation, the Bloomberg Quint and the Quint have a page for the Kerala Relief Fund in association with Gunj. This is by Bloomberg Quint, of course, in order to help Kerala get on its feet. So you can visit this page and make donations should you feel like. Well, that's all that we have on First Word today, but lots more lined up on Indian Open. We discuss Bluestar's outlook for the rest of the year after weak sales this summer with Joint Managing Director B. Thiagarajan, and decode Sonata Software strategy for the next 3 years with CFO Prasanna Oke. More importantly, talk about what the rupee impact could be as well on mid-cap IT. But all of that is a bit later on. After this break, full tilt towards the day's trade.
Welcome back. You're watching Indian Open right here on Bloomberg Quint. A quick look at the Asian markets before we move on to what's been driving our markets. Asia's trading a mixed bag right now, but Shanghai up about a good percent. Remember, yesterday's trading session saw state-backed funds buying into the market in the second half to stabilize the markets. We're seeing a good move today as well. Hang Seng up about 0.25%. The Nikkei is trading flat, 20,192. Remember, this comes on the back of slightly more thinner volumes and muted performance from US as well. Taking a look at SGX Nifty and how our markets are positioned for trade today, so fairly flat. 11,593 is where the SGX is trading up, marginal 9 points in trade. Looking at our markets, we had a spectacular run in yesterday's session, record highs for the Nifty as well as the Sensex. So obviously, there has to be a lot more action in the futures and options space as well. Resistance is shifting upwards. Navneet is here to take us through all the details. Navneet, a lot of pure positive indicators, premium expanding, and now 11,600 becomes a central focus.
That's right. In fact, I think the street will be watching out for the 11,600 mark on Nifty. And not only that, I think the all-time high levels on Bank Nifty too will be watched out in today's session. Though we touched record highs for Nifty, not major build-up, I would call it, when it comes to the futures. However, premium definitely expanded from nearly 17 points to 27 points. Now, remember, premium expansion is actually a very positive sign. Despite of higher levels, it's telling you that the traders are not taking any sort of short positions around those levels. And similar was the case actually for Bank Nifty futures, closed with a premium of 57 points, but no major build-up seen when it comes to the future. What's supporting this market yesterday was definitely India Volatility Index, which fell nearly 1% in trade. So watch out for that one. And also the rising PCR. Now, looking at this level, one can call it that the markets are looking overbought, but Nifty PCR went up to levels of 1.72. You had the Bank Nifty PCR also inching higher to levels of about 1.41. What led to higher PCR was definitely more put riding. As you can see, 11,500 put strike added a lot of open interest in yesterday's session. And unwinding, call writers have been running for cover here, which is a positive sign. As you mentioned, the base now for this market is moving higher. If you look at the open interest distribution now, maximum open interest is now at the 11,600 call. And also on the put side, it has has shifted to 11,400. So the range has become quite narrow for the August series. Watch out for that one. What did the institutions do yesterday? Well, though the markets are looking very good right now, but let me tell you, the FIs have been hedging their long positions. So on the index short side, in the last 7 sessions, they've added nearly 37,500 contracts. And also the percentage of long, remember, during the series, it was somewhere about 59, which has fallen to about 51%. And obviously on the index option side, some bullish bets seen via contracts being added on the put short side, Neeraj.
Interesting, Navneet. So, well, that's the analysis of what the FIs did and what the trend is looking like. Now, we spoke about a bunch of stocks as well yesterday. I think there was a list of three.
Three stocks, yeah.
How's that shaped up?
I think 2 are out of the F&O band. So Adani Enterprises and the Jet Airways, both of them are out for today's session. Adani Power missed out just by a percentage. So let's see if it comes out for Thursday's session. So watch out for these 2 stocks, and also watch out for stocks like Divi's Laboratories. That fresh long positions was seen for this one, and also something like Federal Bank. That's been witnessing fresh shorts at least for the last 2 sessions.
Well, great. Thanks a lot for that, Navneet. And remember, if you saw Countdown yesterday, you would have seen we spoke about these 3 names. I think the more important one being Adani Enterprises. Strong moves on Monday. There's some fundamental triggers that came in Friday's session, now out of the F&O ban. It's a stock that's rallied quite a bit, but you never say never with these names. The rally is strong and is lasting for now. Don't know for how long it'll last, though.
Well, at least looking at the markets and the overall picture out there, some volumes are backing it. And as you know, the FIIs have come back into play. A lot of strong buying activity happening. So hopefully, if not an up move, maybe just a consolidation for the markets. Let's see. Let's hope. Let's look at the aviation pack now. We Indians love to fly, and that's helped the aviation sector posted 20% rise in passenger traffic in the month of July. The latest DGCA data also shows that airlines managed to pack in more flyers into each plane. Soumit Sarkar is joining us now with more details. Soumit, looks like a good monthly number there.
Yes, it is a very good monthly number. Now, despite the end of the tourist season, the passenger growth in the domestic aviation market was close to 21%, even higher than the growth rate seen in the holiday month of May, where it was close to 16%. And this 21% passenger growth rate is the highest seen in the last 3 months by the company, now 3 months by the industry. Now, this is purely on the back of capacity addition and because of lower fares. And this passenger growth rate of 21% is led by the market leader, that is Indigo. Now, for the company, the passenger growth rate compared to last year was 31.5%, the highest seen by the company in the last 18 months. In Jan 2017, the company had reported a passenger growth rate of 40%, while now the company has reported a passenger growth rate of 31.5%, and this is purely on the back of the aircraft addition seen from Indigo's side. Now, if you remove Indigo and see other passenger growth rate for other major operators, well, it was subdued for all of them. For Air India, the passenger growth rate was close to 11%, which has been declining for the company, and it has now declined for the 4th consecutive month. For Jet Airways, the passenger growth rate was only 4.2%. Now, this is higher than the passenger growth rate seen in the last month, but it is still way below the industry growth rate of 21%. For SpiceJet, the passenger growth rate was 5.1%. That is the lowest reported by the company in the last 33 months. And this is on the back of no capacity addition and because of competition that SpiceJet has been seeing on its routes. Now, if you see the passenger load factor, which is also known as the capacity utilization, now that has increased for all the operators compared to last month. For Air India, it has increased to 82.3%. For Jet Airways, it has increased to nearly 84%. For Indigo, it has increased to 88.7%, and for SpiceJet, it has marginally increased to 93.8%. And this is the 39th consecutive month where the company has been able to report a 90% plus passenger load factor. Now, on the market share front, if you see, Indigo has been continued to increase its market share. Indigo's market share in the month of July stood at 42%. This is the highest level of market share reported by the company in the last 20 months. Now, for other operators, it has remained largely stable. For Air India, it has remained at 18.1%. For Jet Group, it is at 15.1%, and for SpiceJet, it has remained at 12.3%. It is largely stable compared to the last month. Lastly, on the performance side, if you see, Indigo's flight cancellation rate has continued to show some positive signs. In the month of July, the flight cancellation rate was as low as 0.09%. This is the lowest level reported by the company in the last 28 months, and this low level of 0.09% definitely shows that the engine issues are now behind for Indigo.
Wow, interesting. Soumit, thanks for putting this into perspective. That would be a sigh of relief for a lot of investors in Indigo, right? The engine issues had plagued the airline for multiple months now. June seems to have been a rather good quarter. I must add, though, for a flight which is 45 minutes from Goa to Bombay, which takeoff time was 5:05. They started boarding at 4:10. They did take off on time.
Now you're just showing off you went to Goa.
No, I'm just saying that they are putting all the right practices in place to ensure that there is an on-time flight performance, which is what seems to have been the case in the month of June at least. Maybe for the month of July and August as well.
Stock prices react, at least for Jet and Interglobe.
Yeah, and in fact, good question to ask actually, Hadrien Mendonca. Just a quick chart check out there before we get to the whole market check. Hadrien, good morning. Thanks for joining in. Let's just start off because we were talking about the aviation companies. Now, fundamentally, we've spoken about how the months have been. Technically, does a stock like Interglobe Aviation provide any room for a trade?
Yeah, hi, good morning, Neeraj. Yeah, definitely, Indigo and Jet Airways both, in fact, are showing very good momentum. In fact, Indigo for the past 2.5 weeks, if you see, it is going through a very good upswing. And this upswing is also seeing a good participation in volumes. So in terms of price action, definitely there is this positive build-up that we have observed. And in fact, if you notice yesterday's move, it has actually broken out from a 1.5 week consolidation phase. So I think going forward, Indigo from here on can continue gaining momentum, and on the upside I'm expecting a target of around 1170. Now why 1170? Because that is very, very important 200-day moving average. So I think that would be acting as a very strong resistance on the upside. For traders, for swing traders, can continue to hold long positions. In fact, if anybody wants to build a new positive position, definitely one can do that, so for a target of 1170.
All right, looks like it's moving slightly above its 50-day moving average as well. That's in the globe, up 3.45 in yesterday's trade. But Hadrien, let's come to your Nifty trading strategy, if you have any, at these current levels. At 11,550, do you see movements crossing towards 11,600?
Yes, absolutely. So the overall view continues to remain bullish, from my end. And in my perspective, if anybody wants to go long, one can definitely go long even at these levels. I'm expecting the next, resistance is at around 11,660 levels. Now, why I'm coming up to this number? Because Nifty has actually broken out from a 2-week consolidation phase. And, the best part about this breakout is we have seen it with a positive gap that happened yesterday. So there is, given all the scenario, there is one small thing that is concerning, me right now, and that is the divergence that I'm observing on the relative strength index, which is slightly concerning at this moment. With today's open, it is very important we should be able to carry forward the momentum that we saw yesterday in our markets. If we don't, I think we'll enter into consolidation phase, but definitely after a little bit of sideways move, and once we, plateau out on the relative strength, I think once again we'll resume our uptrend, because the trend is pretty solid at the current moment. Participation from important sectors that should be participating is visible. I think the momentum is up even at this, at this juncture.
Okay, Hadrien, stay on. So much more to talk about, but let's also discuss some key stocks in news aside of aviation, aside of telecom, aside of key results that are likely to come out. Shraddha and Nikki are here with us to talk about some key newsmakers that could well have some bit of a reaction in the session today. Both of you, good morning. And Shraddha, let's start off with you.
Yeah, so FTC Limited could possibly react negatively. They've received 8 observations from the US FDA. This is for their Aurangabad plant. You also have Max Ventures, which will be in focus, and this is on the back of a ET report, which says that the company's realty arm, that is Max Estates, will invest about 1,500 crores in office realty, for which they will borrow 770 crores over a 3-year period. Also, some interesting bulk deals. Team Lease Services, where Gajar Capital and GPE India together sold about 3.27% stake, which is worth 148 crores. Earlier in April also they had offloaded about 4% stake or so. On the other hand, Franklin Templeton Investment has acquired 2.8% stake, and Kuwait Investment Authority has picked up about 0.5% stake. Wadilal Industries investor Ashish Kacholia sold 5% stake. He held about 7% or so as of 30th June. And you have Poranju Elliott's EQ India fund, which has picked up a very small 0.7% stake. The stock already ended about 20% lower yesterday yesterday, so I'm not sure if you'll see any reaction today. And Newgen Software Technologies, where Malabar India Fund has bought 1.4% stake. The seller, on the other hand, was Birla Sun Life Mutual Fund. This stock also ended 3.5% higher yesterday. I'm not sure if we'll see some incremental uptick, possibly a small move.
Yeah, Sumit Nagar is a smart stock picker. Should be interesting to see what happens in Newgen. Don't know too much about the company, to be honest. But Wadilal could be an interesting one. Thanks for that, Shraddha. And Macquarie's note on metals and mining, Nikki.
Yeah, it's a very interesting note that has come out. They've spoken about how trade war uncertainty and China deleveraging could actually play as a headwind for the sector. But then they see no upside in commodity prices in this year. But then however they expect the prices to sustain around that higher levels. They've seen FY19 estimated prices are significantly higher as compared to what we've seen in FY17. They expect cash generation and deleveraging to continue. In terms of commodity outlook, they've spoken about steel prices where higher utilization have been drawing the prices higher, but then they expect to soften. Aluminium prices expected to be supported by the backward integration or declining cost pressures. Zinc, that's a deficit which is playing out as per the script, but then the new supply might catch up soon. Graphite, they no longer see that as a commodity. In top picks, that's divided into six stocks. I'm going to be dividing it in non-ferrous and ferrous space. First, addressing the non-ferrous, it has a outperform rating on Hindalco, where it says that the focus to downstream is expected to drive a re-rating. Vedanta too, they have an outperform rating. However, they feel that the stock could be running out of steam. Cost inflation is offsetting the volume benefits. And for Hindustan Zinc, that's the only counter where they have the neutral rating. They do see some growth visibility, but then the counter lacks near-term triggers. JSW Steel and Tata Steel, they again outperform. They've maintained the outperforming rating there. JSW Steel on back of the higher capex plans, and Tata Steel back on the focus on domestic growth. Coal India too has an outperform rating by the brokerage, but then they see the divestment uncertainty as the last overhang for the stock.
Okay, interesting names. We'll watch out for all of these. Thanks a lot, Shraddha, as well as Nikki. Mayuresh Joshi, I believe, is with us. Mayuresh, good morning. Thanks for joining in. You know, so many companies which are in focus, Mayuresh. I don't know if you got a chance to look at the aviation data, but seems like Interglobe Aviation's past troubles with regards to flight cancellations, maybe engine troubles, might be coming to an end. I maybe too premature to really predict this. But what did you make of these June numbers, and what's the outlook on any of the three names?
Morning, Neeraj. So I think a large element in terms of how the numbers are panning out and the expectations again in terms of the aviation traffic actually increasing. I think that is probably given in terms of the discretionary spends going up and travelers probably more attuned to traveling by air, whether it's domestic travel and international travel. Obviously, I think the beneficiaries because of higher yields actually play out. But a large element in terms of how the crude prices have behaved, and that was very, very evident in terms of their cost per available seat kilometer, and that had shown a huge deterioration, which had an impact on their EBITDA margins. The optimization on the other front, on the costs angle, excluding fuel, I think the companies are probably trying to attain a certain level, but what you've probably seen in terms of competition and the realization not growing at that pace, I think that definitely impacts the overall yields, which have probably faltered and are expected to remain soft. On the other hand, when you're probably talking about the traffic growth, the available seat kilometers obviously increase. The load factors are obviously showing signs of improvement. And as I said, I think these figures might probably get sustained at these higher levels. But what probably comes through also is the rupee depreciating against the dollar, because a lot of expenses are probably booked in dollar terms. So in that sense, the hit in terms of a translationary impact onto their P&L is also very, very evident. So I think all these factors probably are still going to create some amount of an overhang and softness in terms of reported numbers. Until we've got volatility both in terms of crude prices and the rupee movement, I think it's best to stay a little bit away from the aviation sector. If these two variables stabilize, I think the other factors will definitely work in their favor. So I think wait and watch for me at least.
Right, aviation as a pack this year has not had a very favorable time, so all of them down under. Jet Airways, for its own reasons, down 62% this year. Gaurav, Bissa also joins in right now from LKP Securities to run us through his views on the index as well as few stocks that he's watching out for. Gaurav, let's start off with the index first at 11,500 plus.
Good morning. In our previous conversation, I have been quite vocal about that Nifty might again see a fresh all-time high. It's touched those levels. It's seen a good up move in last 2 or 3 trading sessions. There's a lot of writing that we are seeing 11,400 put option, even some amount of writing 11,500 put option. I would wait for a small consolidation that cannot be ruled out. Nifty can dip towards the level of 11,500. That would be actually a good consolidation. I would recommend buying a put option. Buying a call option, other 11,600 call option at that point in time. When you get around 45.50 for target price of 75.80, one can keep a stop loss of 32 rupees. Going ahead, I expect Nifty to head towards the level of 11,620 to 11,650. But the risk reward would not be that favorable if you buy at the current market prices. So any dip in the Nifty index would be quite lucrative, and the kind of data it is showing, there's a good chance that after small consolidation, we may see a strong up move coming in. As far as the individual recommendations are concerned, the first recommendation would be buy on L&T Finance Holdings. We have seen about 4% long positions getting built yesterday. It has been trading in a range of 175 to 185. So range breakout has been seen. A lot of buying has been seen in 190 and 200 call option. That again shows that the chances of going some more upside is quite possible. On daily charts, we have seen a breakout happening in bullish flag patterns. A lot of positives in the name. One can play with the stops of 184 and immediate target price of 192. If this is sustained, 200 in next 3 or 4 days can also be seen. Second recommendation would be buy on Bajaj Auto. We have seen a lot of shorts were seen getting built. A good amount of correction has been seen from over 3,000 mark to 2650 levels. We have seen a bounce back coming from those levels. Yesterday, about 4% reduction in open has been seen. Short covering has been seen. A small breakout on daily charts. If the current level is sustained, 100 rupee up move cannot be ruled out. For trading per se, for a day or two, one can have a stop loss of 27.10 and buy for targets of 27.90. And final recommendation would be sell on Z. Consistent short position is seen getting, it has given a breakdown on daily as well as weekly charts. On weekly charts, it has given a breakdown from upward sloping channel that has been respected for last 4 years. So there's a strong breakdown that we have seen with a stop loss of 514. One can sell Z for target price of 490.
All right. Gaurav, stay on with us. Hadrien, I believe you have stock calls on RBL Bank and L&T Finance.
Yeah, so both the calls are on the bullish side, and we are doing we are going for a breakout play on both the stocks. So RBL Bank has actually broken out from a very beautiful symmetrical triangle pattern with good volume participation. I think one can consider going long even at these levels for a target of 607. And place stop loss at 583. The second call is L&T Finance, but the gentleman on the other side already has a call on this day, so I'll switch on to another call, that is Pidilite. Pidilite has also broken out from a range after consolidation of past 1.5 weeks. We have seen good volume participation once again, which is very important for this move to sustain. I think going forward, we could see Pidilite moving higher towards its target of 1180 after the breakout that we have seen, and one can place stop loss at 1120 levels.
Very interesting. Four calls, and one of them being, or 5 calls maybe, one of them being a consensus, which is L&T Finance Holdings. Do watch out for that. It's had it's had 2 or 3 very good days in the recent past. Let's see if there is more in store for L&T Finance Holdings. But it's 8:50, that time of the show when we get our special segment Bloomberg Edge, wherein Yash Upadhyay today joins in to tell us about a pattern that the terminal is throwing up on a stock. And Jesh, what's the stock on our radar today?
No good news coming in for Federal Bank, at least on the charts, as the Bloomberg proprietary function, which is the trender indicator, that has indicated further weakness coming in after the stock closed below the 50-day moving average. But before going forward, let's try and understand what the trender indicator is and how it works. Basically, it uses the average true range to identify a reversal in the trend and generate a buy or a sell signal. And it's quite simple simple to understand. Basically, when the trender indicator turns from red to green, you buy into the stock, and similarly you sell when the trender indicator turns red from green. So coming back to the chart, after the big move that it saw yesterday, a down move about 5%, the trender indicator over here, the breakout over here after turning green, it has turned red following yesterday's move, and also the fact that it has closed below the 50-day moving average indicates that there could be further weakness in the short term going forward for Federal Bank.
Okay, and how does trender work for Federal Bank? Has it indicated something in the past as well, Yash?
Yeah, so over the past, it has generated a sell call on the stock 3 times, and if you see the average sell ratio has been about 21% going in the back.
Wow, so back testing it, the returns have been fairly high. Yash, thanks for putting that into perspective. Federal Bank, Mayuresh, interesting. The technical triggers on the terminal indicator sell call. Now, the reasons are obviously known to everybody. My question is that after multiple quarters, it seemed like Federal Bank is getting back on track. Shyam Srinivasan's commentary was positive. Does this disrupt all of that? Would you reckon that there could be more downside to Federal Bank?
Unfortunate of what has happened and the kind of exposure that the bank has within the state of Kerala. I think you're obviously going to see some amount of provisioning actually being taken by the bank in this quarter. So from a large recognition element, you might probably have some amount of impact. But yes, I think when you're probably looking at the quarter gone by and the kind of management commentary that is supporting the kind of dynamics that one really expects the bank to probably deliver, specifically in terms of their exposures to the MSME sector, the SME sector. I think some amount of pain for this quarter, Neeraj, but again, I think any decline onto this counter, I think the valuations might become very, very attractive. And then I think the bank might look a little bit more attractive. But you can't rule out, as your indicators are pointing out, further downside to the stock. But then that becomes probably a good point to start accumulating.
All right. 34% of its lending, 64% of its deposits directly linked to the state of Kerala. Stock actually down about 5% in yesterday's session. So some sell indicators coming there. On the bank Nifty, Gaurav, if I want to come to you, what are the resistance levels and the support levels that we should keep in mind?
Well, if you see the kind of move that we have seen in Nifty, similar has not been seen in Bank Nifty so far. We have seen a considerable breakout coming in, and again, it saw some consolidation. Fresh lifetime highs were made, but Bank Nifty is yet to see that. The immediate resistance for Bank Nifty would be around 28,350 to 28,400. Fresh up moves are going to be seen if it sustains and crosses level of 28,400 on the spot side. Then we can expect levels of 28,700, 750 coming within a matter of 4 to 5 trading sessions. If one looks at the support side, the strong supports are seen at levels of 28,150 to 28,120. So, and dip in the Bank Nifty would also make it quite lucrative. And one can buy a weekly call option for that matter if there's a small dip coming in the Bank Nifty index.
Okay, we'll watch out for that one as well. Watch out for some traction, maybe for further traction in HDFC and HDFC Bank. There's some serious delivery-based buying seen yesterday. After a while, we saw both of those stocks rise. Look at that, 1 month performance down for both of those. But in yesterday's session, there was some serious uptick that we saw. I mean, as 1.5%, but both stocks moved up, stayed high. It was a good day of trade for both of those, as was for the upstream companies. Reliance and ONGC did very well, but there's some very interesting moves that the stock of ONGC has been throwing up, correlated with crude as well. Devina is here with that same update. Devina.
Well, generally we talk about how, crude oil prices, once they increase, realizations for some of these upstream companies tend to be much better, and therefore the price performance of that should improve. But we're not seeing that correlation, at least on the year-to-date performance of ONGC, which has been down 13%, even though the prices of Brent crude have been on the stronger side. If you can see, this is from January onwards. Well, there was a correlation up until the month of February, but then you can see the clear divergence, which is expanded till right now. So a 7% gain on the normalized gain on the crude versus a 13.5% decline on ONGC. Obviously, ONGC has its own factors plaguing it, the subsidy burden, uncertainty, whether the shortfall now will ONGC have to fill that gap now, though the government has not asked ONGC to do so yet. And they made some big ticket acquisition for HPCL, so there's a slight bit of a cash pressure on their books as well. And gas prices have not been supportive as well for ONGC. So that could probably be the reason for this divergence. But let's see, the stocks under pressure off late, but yesterday's session proved otherwise. So let's see how this correlation works out in the near future, Neeraj.
Mayuresh, you want to comment on that? ONGC individually?
No, so I think a large element of what Devina mentioned, I think the kind of apprehension that one really has if crude sustains above that $70-75 mark, and there are under recoveries whether ONGC has to bear that subsidy burden. So that's one. The other element in terms of the acquisitions that they've done and the kind of merger related cost pressures, I think that's clearly getting played out on their balance sheet. The third element obviously is ONGC Videsh, and the kind of receivables that one looks at from Sudan or Venezuela. I think that definitely puts some amount of pressure in terms of ONGC Videsh's cash flows. The fourth element with higher crude prices, at least at this point of time, I think that entire benefit probably passes through the bottom line. But what you also witnessed over the past few quarters is high exploratory costs. So I think that probably has dented the direct flow onto the bottom line. The dividend yield obviously has remained very, very high. But again, I think considering these factors, there is some amount of apprehension in terms of these yields actually moving southwards. So valuations look attractive, but all these factors might be a drag onto the stock. Is there a potential upside from the current level? I think it's a very slow and steady mover, Neeraj. So unless all these factors probably play in tandem in favor for the stock, there is reasonable amount of upside. But at least at this point of time, my own sense is that because of these factors, it's more constrained to a broad range.
3-month price performance of ONGC down 9%. Mayuresh, any other specific stocks that you're watching out for quickly before pre-open?
So I think banks look interesting. RBL Bank is something that I've liked, and considering the kind of performance that the management is talking about, both in terms of advances, growth and asset quality remaining extremely stable, I think their direct benefit in terms of the leverage on their balance sheet can get displayed both in terms of return ratios as well as the advances growth itself is going to be very, very strong to support the valuations that it probably commands. RBL Bank probably can be one of my preferred picks.
All right. Just stay on with us, gentlemen. We've got about 36 seconds left to go for market pre-open after yesterday's concrete performance. Remember, with the Nifty holding on to its early morning gains, there's no sign of apprehension in the market moves yesterday. Whether or not we see that happening today and there is a follow-through remains to be seen. So far, Asian markets there, muted for the Nikkei. The Shanghai carries on its gains, 1.3% higher, and the Hang Seng there up about 0.5%. Very muted from the SGX Nifty this morning, so just about 4 points higher. Nothing much to write home about. 11,588 on the SGX. Market pre-open for us. Nifty up about 1/3%. I think it's increasing now. Sensex at 38,445. We wait for these prices to stabilize a bit, but let's take a look at individual stock movers. NTPC comes up at the top, 2% higher on the index. You've got Grasim, which is up 1.8%. Bharti Infratel is up 1.7%. From the IT pack, Tech Mahindra does well for itself, 1.6% higher. Asian Paints 1.5%. Axis Bank up 1.3%. BPCL up 1.4%. Maruti is up 1.4%. HCL Tech again from the IT basket. Eicher Motors, Coal India up 1%. Indiabulls Housing, Cipla, ONGC, we just spoke about that one. It's trading at 170 now. Vedanta is up 0.5%. Amongst the losers, Bharti Airtel is down in trade today, 1% We just spoke about that in terms of their subscriber addition numbers. Indian Oil is down it's down 0.5%. HPCL and HDFC are some of the other losers.
Well, interesting. I'm interested in seeing what the Aviation pack is doing, if there are pre-open rates for Interglobe Aviation in particular, because that seems to have been that clear winner when it came to the passenger traffic growth numbers that came out in July. Nothing much as yet. SpiceJet and Jet could also come up, but no big moves there. Vadilal, wondering if there is some move on that stock. It was down 20% yesterday. flattish in the session today, so no follow through. Though I must say, Rain Industries, something that Devina spoke about yesterday, is down another 5% in the session today. So that stock continues to roil. What's also gone down, or what seems like it'll go down, is Aegis Logistics, likely to open slightly lower in trade. And amongst key bulk deals, I think Newgen Software and Team Lease, interesting purchases there. Franklin Templeton has bought in. Okay, Newgen firstly, Malabar India Fund, Sumit Nagar's fund has bought into Newgen Software. Let's see, after the 3% uptick, maybe some more. Team Lease, one of the founding PE funds, Gaja Capital, sold off some shares, but the buyer is the interesting one, Franklin Templeton Fund, and that stock, which has been a clear winner all of the last 18 odd months. Team Lease likely to start off on the 3% higher. Quick check on the money markets before we get into the brokerage calls for the morning. The rupee 69.62. It's been last 2 days of strength. Friday was shut, but this week the money markets and the rupees behaved rather strongly. The bond yield should come up on your screen. I believe 7.8384, 7.83. Hardly any moves in the session today. Let's get in Somit Sarkaru Johnson with the top brokerage calls for the morning. Somit.
Good morning, Neeraj. On the big brokerage calls for the day, first we have Credit Suisse on Avenue Supermarts. Now, the brokerage has initiated coverage on the stock with an underperform rating and a target price of 1,150. Now, according to the brokerage, Avenue Supermarts is a very well-run business with a proven track record, that too in an industry which has a very low penetration level. However, despite this, the brokerage keeps an underperform rating on the stock because of the valuations. Now, according to the brokerage, the valuations are factoring in a bull case scenario with a low margin of safety for Avenue Supermarts. It also says that the current share price implies that DMart will have nearly 40% market share in the organized retail space by financial year 2040, which is highly unlikely according to the brokerage. Lastly, the brokerage also expects the company's margins to remain capped because of its store expansion plans going forward. Second, we have is Bank of America Merrill Lynch on Tech Mahindra. Now, the brokerage has raised the rating on the stock to buy from underperform and have also hiked the target price to 800 rupees from 600. Now, the brokerage has raised the rating as it believes a revival in the telecom sector, which will drive not only a boost to its top line but also improve the margin outlook for Tech Mahindra going forward. Now, on the back of this revival in telecom sector, the brokerage is expecting the company's operating profit to grow at a compounded annual growth rate of 18% over FY18 to FY21. Lastly, it also expects the next round of rally to be driven by early success in the automation efforts, which will also be a more qualitative rally for Tech Mahindra according to the brokerage.
All right, Sam, thanks very much for that. A quick look at some of the mid-cap IT names, Mindtree, KPIT Cummins, Sonata Software. All of these stocks have been doing really well on the back of what's been happening to the currency. Gaurav, any call on these stocks on the kind of price performance that can be anticipated after their strong up moves this year?
KPIT is just about trading near the crucial support levels of 285 to 286. It's following 100 EMA displays around here. Also, for last 1 year trend line, it is also having a support at 285 to 286. So if this level is sustained, one can buy with a stop of 285, target of 305. But one name that is looking very strong, not yet given a breakout, would be Wipro. If it sustains level of 286, 288, I expect 7 to 8% up move coming within a matter of a week or so. A strong breakout on the cards. We're not seeing aggressive long positions getting built, but there are many technical indicators that are showing a good up move on the cards. So I would buy Wipro very strongly about 286, 288, stop loss of 282, target of 310, 315.
Interesting. By the way, Quality seems to have shrugged off those selling pressures. Maybe no more selling happening today on the stock. Looks like it'll start off on a positive note in the session today. No such luck for rain, though. Keep that at the back of your mind. Hadrien, you spoke about RBL Bank as one of the financial names. What about the HDFC Twins? They showed some strong moves in trade yesterday. Is there a trade there?
Yeah, definitely there is a trade, but out of both these two, I would prefer an Axis Bank. The main reason here is that it is consolidating, and this during consolidation are the right times to actually try and gradually pick whatever you want to. So Axis Bank is going through a very good consolidation phase after a very strong move, and I think it is definitely going to resume its uptrend from here on. And I think a fresh breakout will be seen once we see the 632 levels broken very comfortably. I think Axis Bank is on its way towards the 650, 660 mark, and one can keep a very good close stop loss, close to 620. So the risk reward would also be favoring, the trade in Axis Bank.
All right. So the other pack that probably needs a watch out for is the consumption pack. And one stock, Emami, there was some news some time ago that they are looking at inorganic growth and looking at picking up brands like Horlicks and Complan. But the company has come out with a statement saying that they are not in the race to acquire these two brands. Mayuresh, are you looking at Emami?
Well, yes, Devin. And again, I think if you probably look at the kind of volume growth that the company has delivered, I think they can deliver much more going ahead. So there has been some amount of disappointment and patchiness as far as the volume growth is concerned. But one must also realize that the kind of exposure that Emami probably has, specifically in rural areas, and the kind of beefing up that it is doing in terms of their direct distribution reach, cutting down on their wholesale dependence, all these factors are going to abet both their margins as well as their profitability going forward. The third element in terms of the moats that they've created around their products, I think they're extremely strong. So the input cost inflation that we've probably witnessed over the past few quarters, as they stabilize and as the demand picks up, I think the volume-led realization growth should be very, very evident in terms of reported numbers going ahead. So I think reasonable amount of rains, the MSP price hikes, all these factors should probably play largely for the consumption sector as a whole. But Emami can be a big beneficiary from all these factors as well. So yes, I think I retain a very positive view on Emami.
Are you tracking what's happening to stocks like Rain Commodities and Goa Carbon post the government ban on import of pet coke? I mean, though obviously Rain has come out and asked for clarification whether this applies to greenfield petroleum coke, which is used for food stock, and food stock as a category for the imports is allowed. So whether or not that impacts them in a negative way or no, but the stock has taken a beating of 10% over the last 2 days.
No, so you need to wait for clarity, Devin. It's as simple as that. I think unless there is some amount of clarity given both from the regulator side, I think there will be too much of confusion in terms of dabbling with these stocks. They've already taken a huge hit over the past few weeks for various reasons. But to a large element, I think unless the clarity comes out, I think there's no point dabbling with these stocks. So I think just wait and watch.
Wait and watch, maybe 206 though, but the stock is not showing any signs of waiting. It's corrected quite significantly. Good results, 3 good days, and then a slam dunk over the last couple of days. The pre-open rates have settled, and looks like HCL Tech will emerge as the top gainer in the Nifty 50. That looks like starting off on the best possible note in the session today. 1001 or thereabouts for HCL Technologies from the large cap space. Interesting to see that Tech Mahindra could also follow suit. There is an upgrade that has come in on that stock, by the way, but that stock might start off about 1% higher as well. Not too many losers. What may start off slightly weak is Bharti Airtel, down about 1.7%, and the telecom data news out as well. But 5 minutes left for the markets to start. Let's tell you all that you need to know to stay ahead in trade today. Well, we start off with aviation. Indians are taking to the air in greater numbers. Preference for Indigo, according to the DGCA data for July. Passenger traffic grew at 20%. At the moment, Indigo is leading the race, while Jet Airways and SpiceJet lag behind.
Apollo Tyres has fallen victim to the heavy rainfall and floods in Kerala. The tyre maker says production at 2 of its plants has been disrupted.
Goa Carbon says ministry order on pet coke import will impact the company's financials. The stock, however, starting off 3% higher.
An Economic Times report says that Kellogg and Reckitt Benckiser are the latest entrants in the race to acquire GSK Healthcare. They now join Nestle, Unilever, Mondelez and Coca-Cola.
Wadilal Industries comes into focus after Ashish Kacholia sells 5% stake in the company and Purinja Valiat's fund buys a minor 0.5% stake.
And lastly, some key brokerage calls for the day. Credit Suisse initiates coverage on Avenue Supermart with a price target of 1150, while Bank of America Merrill Lynch upgrades Tech Mahindra to buy on Telecom boost prospects.
Interesting. Telcos maybe, both fundamentals and technicals. Hadrien, want to come to you. Bharti Airtel likely to start off 1.5% lower. Is there a trade there?
Yeah, definitely, the stock is not doing great. We have seen a good move in the past, but that move is not been able to carry forward. Firstly, because it is failing to surpass the long-term 200-day moving average, and the current consolidation, we are seeing it, moving around it 50-day moving average, which is acting as a very strong resistance on the upside. So I think if we are opening lower, we'll see a consolidation breakdown on the downside, and which is not a good sign for any long holders in a Bharti Airtel. So the trade definitely is on the negative side, and I think Bharti Airtel has a potential of coming lower even till the 350-355 levels in the near term.
Mayuresh, Bharti for you, and what did you make out of the numbers, subscription numbers?
No, so again, I think one has to really look at the larger picture. So I think Bharti has probably sustained itself both in terms of the churn ratios being extremely low, but what probably came out through the numbers were very, very glaring in terms of the data ARPUs actually still taking a beating. On the other hand, what you probably expected to see from the Jio fiber band rollout and what kind of plans do they come out with. I think if you look at Bharti's balance sheet and the P&L extract, the kind of margins that Bharti probably makes in its wireless business, in the DTH business, I think they're very, very substantial. So if Jio probably does something disruptive on this front, I think this high margin business can also come under pressure, which probably means that the overall earnings can be a little bit soft and subdued, at least for some foreseeable future. So I think as a sector, probably again, I think the softness in terms of reported numbers can very well continue, whether it's Bharti or IIFL.
Okay, Mayuresh, we'll leave it at that. Thanks so much for taking the time out and joining us today and giving us your perspectives.
You so much.
Really appreciate your time. Bharti Airtel, though, because of the lower net subscriber additions, presumably likely to start off about 1.5% or over 1.5% lower in trade. So that stock right at the top when it comes to the losers. But less than a minute to kickstart trade. Let's try and narrow it down to the top trading calls from our two experts. Gaurav, Bissa, to you first. Your top call for the day.
It would be L&T Finance Holdings. The kind of data that we have seen, the kind of technical breakout on the charts that we have seen. I think this is one that should be on the radar.
Right, Hadrien?
Yeah, so the one that we are liking is Adani Enterprises. If I'm not wrong, it's in the ban period, so it's strictly advisable not to increase positions in the futures. But one can consider buying it in cash for a target of 220 at the stop loss at 208. The second one that I'm really bullish on is National Aluminium. I'm expecting a target of 75 with a stop loss at 70 rupees.
Interesting. Nalco was a call in yesterday's session as well, had a big spike. I think Hemant Kapadia recommended that. So do watch out for Nalco too in the session today. 24 seconds left for the markets to kickstart trade. Gaurav, Hadrien, just stay on, gentlemen. We'll just take in an opening thought from you post-market open. And then, of course, get in a very special guest. Jinesh Gopani of Axis AMC will be with us as well. But we're likely to start off flattish in the session today, at least for the banks. Remember, the Nifty Bank underperformed in trade yesterday as well. Today on start 2, the pre-open rates are indicating that the Sensex and the Nifty will start off well. The banks flat. And that's how we have started. About 0.25% for the Nifty and the Sensex. But the Nifty Bank is starting off very, very flat in the session. In fact, almost getting ready to dip into the red or be a very flat trade. I doubt that the mid caps and the small caps will be doing something dramatically different. Yeah, very flat for the small cap space. Mid cap index about 0.33%. Bring up the heat map and let's see what's happening. Well, not too many losers, save for Bharti Airtel, which is down about 1%. That too. Not really a slam dunk, just about 1% and a quarter. HUL marginally off, Kotak Bank marginally off, but HDFC too is flattish in the session today. What about the gainers though? HCL Technologies and Tech Mahindra, both of them up and about in trade. Techem has an upgrade too, by the way, that has come in. ITC marginally higher in trade, Bajaj Auto marginally higher in trade, but quite unlike yesterday, we don't have too many news-based activity in the large cap space, not large activity, save for one Bharti Airtel, which is down about 1.5%. Not too many other stocks which are flying around. So let me try and talk about some newsmakers, and then before I hand it over to Devina for what's happening at the broader end of the spectrum. Firstly, aviation, and why Interglobe Aviation seemed to emerge as a clear winner in the latest data that came out. The air traffic growth did improve for the space at large. However, the stocks are not taking any cues from that. Jet is still down about a couple of percentage points. SpiceJet, if anything, up about 1.5%. Maybe telcos are showing more, but we'll talk about that in a bit. Firstly, stocks which are near new highs, or at least nudged the new highs in trade yesterday, and starting off on a very flat note, each of these three very active in trade yesterday, not quite in the session today. Remember, RBL Bank is a key technical pick from our experts as well. So that's 2. 3, some key bulk deals that happened. Newgen Software, Team Lease, and Vadilal. And well, Newgen 3.5%. Sumit Nagar's Malabar investment fund is bought into it. And Team Lease about a couple of percentage points higher, wherein Franklin Templeton has bought into it. Vadilal, after that 20% downtick yesterday, flattish in the session today. Devina, what are you spotting?
Right, some counters there as we've seen mid caps and small caps muted start there. We'll start off with Thomas Cook, which is up about 2.5%. Jyoti Laboratories at 220 is gained ground as well. We've got Indraprastha Gas IGL, which is at 288 right now, so that stock's in the green. Some action there in terms of the overall volumes as well. SpiceJet, we've got Zensar Technologies. These are the stocks to keep an eye out on the positive side. Adani Power also at 31.8. That stock's trading higher by closer to 1%. BIP Industries up 1%. Nalco, we've got Radico Khaitan. V-Mart, Capital First, these are some stocks to watch out for on the positive side. So, and volume action also. AIA Engineering, we spoke about that one. Darshan in the morning highlighted the performance of the company. Stocks up about 0.7%. Century Textile, Kochi Shipyard, Godrej Properties is up about 0.5% in trade today. JK Cement, Natco Pharma, and Union Bank also. Some of the other gainers and marginal gains of just about 0.1% or so.
Interesting. Opening thoughts. Gaurav, Bissa, anything that stands out for you?
As far as stock specific is concerned, Adani Port is looking quite interesting, given a small breakout. Decent amount of petitions are also seen getting built. With a stop of 376, one can buy for targets of 395.
Final question to you. Techs are looking like starting off on a good note. Telecom and HCL Tech, both of them are higher in trade. Any trades here?
Yeah, definitely. Telecom is, continuing to extend the momentum that it has, built on in the last 4 days. I think, given the momentum that we are seeing, Tech Mahindra is all set to move beyond the 700 and heading towards the 720, 725 mark. I think, every long trader has to keep a close stop loss around 670 levels and play for a target of 720 levels.
All right. Thanks a lot, gentlemen, Hadrien as well as Gaurav. Appreciate both of you taking out the time and sharing your views with us. So those were a whole lot of stocks discussed with our technical guests. Jinesh Gopani, head of equities at Axis Mutual Fund, joins in on the show right now to discuss the market momentum. Jinesh, thanks very much for taking out the time. What have you made of the consequent highs that we've been creating on the index and the kind of the backing that we've been getting from the foreign funds of late?
Yeah, hi. So I think last 1.5 months, if you see, it has been a good broad-based participation coming into the market, especially in the Nifty and the Sensex side. So earlier we used to talk about that last 3-4 months you had only those 6-7 stocks participating, and rest all were maybe sideways. Now you are seeing even the others in the Nifty 50 or Sensex been participating in the story. So I think it's good. Generally, the FI mood also has been positive, I would say, though the numbers are not that big. However, even the sell-offs have been lesser. And domestic fund flow continues in a good way, especially from the SIP point of view. So I think globally also some receding of tariff war issues, with China proposing to talk with US on this. So I think even global, if you see last 2-3 days, we have been seeing emerging markets again on a buying spree on a higher side. I think to some extent, I think we have to wait really to take a longer term fundamental view. but near-term momentum looks good.
Right. But do you have any sense of caution right now? I mean, considering, that this year itself, 24 consecutive days we've been making new highs after new highs. Valuations look a little bit stretched at the current price points as well. So in terms of fresh investments, picking and choosing sectors and stocks to invest in, what kind of strategy would you apply there?
See, as I said, momentum is good. Also, the volatility continues to be pretty strong. So you will see ups and downs very, very high, depending on the news flows, depending on the events. But I guess the good part has been the earnings momentum is back. Maybe not to the extent what we want, but at least the bottoming out of the earnings and the growth resuming is a good sign. If you really see microeconomy, the Indian microeconomy, you are really seeing signs of momentum picking up. If you see the consumption trend, if you see some of the capital goods stocks delivering on numbers, I think all in all, if you take a 3 to 5 year view, leaving aside the election volatility, I think we are in good shape. Near-term momentum, obviously volatility will continue as high as it was, like, let's say 3-4 months back.
Jinesh, good morning. Neeraj here. What's been the fund flow situation at your house, Jinesh? Because the one thing that stands out, say for yesterday, wherein the DI number was about 600 crores, we've seen the investing numbers that come out at the end of every day from the DI side trickle down to sub 150 crores, 200 crores on most days. Are flows in the equity funds still coming at the same pace that they were coming at in maybe the first 6 months of the current calendar?
So to be frank, if you take SIP flows, they have been pretty strong. So they are close to around 7,700 odd crores per month, which still continues. However, it has been flat versus last month. So I think there is some slackness you are seeing after a good 15-18 month run. Also, the markets are where they are. So if you still see the mid-cap index have not come back to the levels where Nifty or Sensex is showing you the numbers. So to that extent, the lump sum money which used to come in a big way in calendar 2017, that money has not been coming that well. I think also after the demonetization, the bump up which you saw in the flows, we see more as a consolidation kind of a phase. The near-term election, the near-term volatility is not helping, let's say, some of the investors to park big money in equity markets. And also as the business momentum picks up on ground, a large part of the money will also start flowing into their businesses rather than parking it in the equity market schemes. So I think if you see, the balance funds have really seen a knock after a stellar 2017 calendar year flows, and that is where you are seeing a slowdown in the flows. Till the time the SIP book continues strong as around $1 billion plus, I think we don't have any problem, because that is a really good fundamental strong long-term money which as a house or as a mutual fund we like, because that is a pretty sticky money which can continue to hold for a longer period of times.
So what have you been doing, Jinesh, in the past 1.5 months? I agree with you that mid caps and small caps are not back to the heydays, but I was looking at the data since the end of the June series. So the whole of July series and August till now, Nifty's gained 9%, but mid caps and small caps have gained about 8.5% as well. So there is a bit of a pullback on the small cap end of the market too. Where is it that you're putting fresh money to work? What themes? And if you can bifurcate between whether you're still preferring the large cap space, not necessarily Nifty, but the large cap space, or are you looking at investing at the broader end of the spectrum?
So generally as a house, we have always gone for a stock-specific stock selection. But our intent as of now is to be more on the large capish liquid names, and that is only to do with near-term volatility and the events which are unfolding, which might have its positive and negative impact on the market. Ideally, we will wait for some of the maybe 1 or 2 quarters to really see to go all out in the mid-cap name. Even if you see the indices on the mid-cap side, if you see the stocks which have participated in the mid-cap indexes are the stocks which have delivered good earnings growth. So I think wherever there is a earnings growth momentum kicking in, there is a surprise on the earnings, we will also try to participate. Ideally, as a house, we like multi-cap as a strategy, but for now, we are more inclined towards large cap than mid-cap.
Are you watching out for how the currency is playing itself out with regards to, some rupee sensitive sectors as well, like IT, metals as a pack, and how do they play out for you?
Sorry, I could not get your question properly.
I was asking you about the rupee sensitive. So if you got like the IT pack, how are you approaching that pack and the metals pack as well?
So I think rupee around 70 odd levels is good for the tech companies, especially if you see the devaluation which has happened along with the other emerging market currencies. So to that extent, tech looks good. Even in that, if you see incremental growth has been strong, the commentaries have been strong. If you see some of the recent reports which have come out from US, even the BFSI space, which is a large chunk of most of the large IT companies, is showing signs of bottoming out and rebounding. I think that holds well for the large mid cap and the large cap IT names. So we continue to invest in some of the stories in that, and we continue to add as and when we get more opportunity in that.
What are the global triggers you're going to be watching out for now, Jayesh? I mean, we've got the Jackson Hole symposium now this week, and we've also got the trade talks between US and China.
So I think on the margin, if you see, there is some receding of negative news flows regarding tariff trade talks because there has been hue and cry from the shipping industry, from the port industry, that if this really gets imposed, the larger import tariffs, there could be job losses in many of those type of sectors. So I think, as I said earlier, that the two countries, the large countries, large economies coming together and sorting out the issue is a good sign. I think we don't need those type of uncertainties for a trade because that impacts the businesses and no one is winner in that sense. So I think it's good. If you see last 3-4 days, there is a calmness in terms of the way the rhetoric was being played about tariff wars, and to that extent I think at the end of the day you need to find a solution to this type of problem and hope that they will come out with the solution in a better way.
Okay, Jinesh, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us your thoughts. Really appreciate your time.
Pleasure.
That's
Thank
the
you.
head of equities at Axis Mutual Fund, preferring large caps even now. Dwelling on specific things just before we take the break, Adani Enterprises as the stock has gained even further, so 3.5% up. Remember, it was a top pick this morning. 220 is where that stock is trading at. The stock which has corrected and corrected quite severely is Vadilal. After that 20% downtick yesterday, down another 7.5% in the session today. Watch out for that. And do watch out for Avenue Supermarts. Well, some bit of selling seen today, primarily on account of the Credit Suisse note, 1587. Will this last? Remains to be seen. It's a very strong stock, tends to bounce back very strongly from multiple corrections. Let's see what happens today to Avenue Supermarts. But take a break. On that note, on the other side of the break, we discuss Bluestar's outlook for the rest of the year after the weak sales this summer with Joint Managing Director B. Thiagarajan, and decode Sonata Software strategy for the next 3 years with CFO Prasanna Oke. Welcome back to Indian Open right here on Bloomberg Quint. A weak summer has taken its toll on most air cooling solution companies. Bluestar might not be too different. The air conditioner maker saw its sales drop in the April to June quarter. The immediate future for the space may not look too encouraging if brokerages are to be believed. Amber Enterprises, remember, yesterday told us that they expect demand to pick up only at the fag end of the year. So will it prompt one of the country's largest air conditioner companies to shift focus to some of the other products like waters and air purifiers? Joining us now to talk about the outlook is Mr. B. Thiagarajan. He's Joint Managing Director at Bluestar. Mr. Thiagarajan, good having you. Thanks so much for joining in. Now, I know that if I look at your bottom line numbers, if I look at your EBITDA numbers and margin numbers, you did much better than some of the others. But let's start off by talking about how the bread and butter, which is the top line performance, was. It was flattish for you. It came off for a lot of other companies as well, clearly showing that it was a weak April to June quarter, maybe due to unseasonal rains, maybe due to a shorter summer as well. How do the next 3 quarters now look like?
Good morning. Thank you for talking to me. If one is in this business of air conditioning, specifically room air conditioners, there could be bad summers. So it was unfortunate that this summer was weak. But I must tell you that the consumer spending continues to be encouraging. June was a good month. July we had seen market growing compared with the previous year. And I don't know about the industry. As far as Bluestar is concerned, July we registered significant growth. I look forward to the festival season. I think if the consumer spending story, as is the case in automobiles and many other categories, if it is going to continue, I think even the festival season should do well. Why I am saying this is because of 2-3 reasons. Number one, our penetration in India is very poor and it is less than 5%. It is bound to grow. This is a category which many households do not possess. After refrigerators, washing machines, two-wheelers, four-wheelers, eventually people end up buying air conditioners. It is the right time for this category to grow. Second thing is water purifier business. This is the season. That is, we call this as Holi to Diwali product, where the market is doing extremely well. We are a new entrant. It is the question of improving our market share and building scale. That part of the business is doing extremely well at this moment. The third thing is the inquiry inflows in large corporate, commercial, industrial, air conditioning business is very, very encouraging. After many years, we are witnessing inquiry inflow in a very large way. So therefore, that part of the business also should pick up momentum. That is a segment 1 in the case of Bluestar. So therefore, while a weak summer is something which is unfortunate, it is fine. But going forward, we are optimistic about the outlook.
Interesting. I just want to break that down into the 2 or 3 points that you mentioned as well. I heard you mention that July was a very good month for you. May not have been for the industry, but you don't have data there. We've done about 20 days of August as well. Are we to assume that the first half of this current quarter, you've seen recovery compared to the June quarter, and a meaningful one at that?
Yes, in terms of volumes, yes. In terms of revenue, yes. In terms of margin, the rupee weakening as well as commodity prices, copper is coming under control. To some extent, there may be a margin pressure, but there is, I would say, first half of second quarter has been well. But I must caution one more thing. The Onam actually sets the festival season on. And you can imagine Kerala Onam will be subdued this time due to the floods. And therefore, that Onam sale push may not happen at this point of a time. But across the country, the walk-ins are good. The consumer spending mood continues. And many sectors are reporting good profits. And I come across every industry talking about this is the greatest period they are witnessing after 3 or 4 years of time. So therefore, employment generation or the bonuses, salaries, everything should be good. I anticipate the festival season to be a remarkable one.
Interesting. Just wondering though, I mean, and before I get to that, this strong or this relatively strong performance in the first half of the current quarter, is it largely due to recovery in the room air conditioner market, or is it got to do with what you mentioned at the end of the first answer, which is that inquiry flows into what I believe is large corporate inquiries for aircon solutions? Has that come in to help you?
Two, three reasons. Number one, I must not fail in guiding you properly. Last year, post-July was a GST recovery period. So compared with that, it should be doing well. So that is the first part of the story. The second part I told you is the penetration issue, where more and more people have to buy at some point of a time. They probably didn't buy during summer, and post-summer they feel the need to. Third is good monsoon will always result in tier 3-4 towns having positive outlook, beginning to spend and acquire things. So therefore that should be the third reason. And going forward, this trend should continue. I think the flood related issue, I pray that it is limited to Kerala at this point of a time. If the monsoon pans out to complete till September, tier 3, 4, 5 markets across India should be doing well.
Are we okay? One more question though on pricing before we get to the outlook. How has pricing been? Because if I'm not wrong, you raised prices by about 4 to 6% in Q3. I don't quite have update. Q3 of FY18. I don't quite have updates after that. Have you raised prices even further? Are you looking to do that because of what you believe will be a remarkable festive season?
Actually, it was post-January in Q4, the prices were increased to 4 to 6%. By July 1, we should have increased the prices further in order to take care of the commodity prices. But actually, the situation is, because you know the industry carried around 2 months of inventory more. Therefore, I don't think price increase is an option at all. The good news is only, it's a silver lining, that the inventory that was bought was at, when the rupee was somewhere around 66 or 67. So to that extent, there is a consolation. So therefore, I do not think the competitive environment will permit you to increase the prices. Because it's a question of liquidating the inventory fast, isn't it?
It is. Well, that was the other concern. A brokerage note, Mr. Thiagarajan mentioned that the inventory in the pipeline is very strong. What you are saying about a strong first half of the current quarter is slightly at crossroads with what the channel checks of brokerages seem to suggest for the industry. Could it be the case that while you've had a good first half, the industry may not have had so because of the higher inventory in the pipeline that still exists?
I would attribute this to our share of business from institutional segment is very high actually. So the corporate, commercial, light commercial segments are doing extremely well. There is capacity expansion taking place, and I am telling you that we have not witnessed this kind of inquiry inflow. Whether it is factories, offices, hotels, restaurants, retail, we are seeing activity across the sectors. So there is a capacity building that is going on in the marketplace. So our institutional segment share is very high. That should be the reason. But then when we are talking about growth, we are talking with regard to the previous period. So therefore, it could be varying from brand to brand. My outlook actually is, even though the summer was weak, the overall market for the industry still it should be around 10% growth the full financial year. I am of the opinion one should keep sight of that rather than one particular month or one particular quarter. Whether FY19 the market would have grown at least 10% over FY18. Earlier our prediction was it should grow by 20%. It is not going to take place. And 10 to 15% still there is a possibility. It all depends on February, March how it will be.
Interesting.
And I am of the opinion market for the full year will never degrow. It is going to be a growth.
Interesting. Some very nice confident statements. I just have one last question, Mr. Thiagarajan. Somebody who's an investor in one of the cooling solutions company was speaking about the penetration levels, and he said that while that number at 4% seems low, if you factually look at the nature of the penetration, it's one air conditioner per house in that 4%. If you look at houses which are maybe 2 BHKs or 3 BHKs, then we haven't even touched or scratched that 4% mark, because per house the penetration also remains under-penetrated in a meaningful way. Would you look at that industry that way, and therefore would you believe that there are multiple years of this 10, 15, 20% growth numbers CAGR for the next few years possible for the cooling solution companies?
But it's a good statement. One have been predicting like this, that today the market size would have reached some 6 million units. China is somewhere around 85 million units. Actually, we should be lagging behind China by around 10-year period. So if 2008 market size of China itself we have not achieved, our goal when we do a calculation for refrigerant policy making or the energy efficiency, etc., we assumed that by 2018 we would have touched 10 million mark. It has not happened. There is some kind of way in which Indian markets operate, but I have a feeling there will be a window of 3 to 4 years time. There should be exponential growth that should be taking place. It is at that point of a time even the prices should come down because of scale. Once in 2 years the energy efficiency norms are being revised, that pushes up the prices. For example, this year what you are selling as 3-star was 5-star in the month of December. By 2020 there could be another energy label change, which means the price levels are being pushed up due to this particular feature alone.
Right.
But having said this, there is you have to play a right balance between how we achieve energy efficiency or sustainability norms in terms of refrigerants, at the same time grow the domestic market so that we become globally competitive. I think the scale will be the solution. I indeed believe that between now and 2025 there should be phenomenal growth. That's why I'm saying even though the summer was washed out, for a full year period the market will still grow. And I have no doubt about it at all. Be it room air conditioners or deep freezers, cold rooms, these product categories in which operate, they have promising potential.
Okay, we wish you all the best for that, and we'll look forward to talking to you post your Q2 numbers as well. It promises to be a strong quarter. We look forward to chatting to you then. Thanks so much, Mr. Thiagarajan.
Thank you very much.
Well, that's Bluestar, a confident Bluestar, I must add, and with reasons maybe. Does Sonata Software have those reasons? Because there are tailwinds to that for sure. It's betting big on its alliance with Microsoft. The company expects to get 50% of its long-term contracts from the tech giant and grow in Europe as well. Another possible tailwind would be the weaker currency. But by how much? That's the question, right? Let's ask Prasanna Oke. He's the CFO at Sonata Software, joins us right now on the show. Prasanna, good having you. Thanks so much for joining in. Let me first get the...
Thank you for having me.
No, pleasure having you. Let me just get the bread and butter question out of the way. Can you kind of simplify it for us? This rupee depreciation for a company of your size, how much of a tailwind does it provide? Because people are constantly at loggerheads. Some people say IT companies hedge very efficiently and therefore neither the appreciation nor depreciation will hurt or benefit disproportionately. There are others who are saying there is a natural tailwind with the currency at 70. Can you simplify it for us?
Yeah, sure, Neeraj. Thanks so much. So basically, the forward covers that any IT company takes or Sonata will take is largely a defensive measure to ensure that you don't have much of the forex impacts. Having said that, as most companies do, we take a forward cover for 4 quarters ahead. Now, what happens with that is that as the rupee depreciates, you do tend to gain benefits in terms of the revenues, which if your functional currency is the rupee. Having said that, you've also taken forward covers, and so there could be a negative on account of that. So overall, it's a defensive measure. But when the rupee starts to depreciate the way it has, the net effect could be positive on the bottom line. Having said that, the only other thing what one needs to take into consideration is the kind of forward covers that you've taken already. So in the case of Sonata, we don't see any large impact of the rupee depreciation, at least for the first half of the year. Post that, if the rupee continues at this level, we could definitely see a benefit. But because we have got the forward covers locked in, we don't expect to see much benefit at this point of time. It could be small, when the rupee starts to depreciate, it could be about 30 bips or so is the benefit that could happen. But that is on Q3 onwards.
Interesting. Okay. Thanks for putting this into perspective. Really appreciate that. Now, let's talk about how business is looking like. Your first quarter looked fairly impressive, both on the revenues and the EBIT front. Is this a sign of how the next few quarters would look like, Prasanna?
Yes, thanks. Yeah, in fact, we have been kind of having above industry average growth for the entire last year. We grew last year by about 18% in terms of dollars, in terms of dollar revenues. So what we as a company, we've got 2 lines of businesses. One is the international business and one is the domestic business. I think on both these fronts, we've shown growth this time, 6% on the top line. For the international business, on the bottom line, if you look at it, both these businesses have grown up by about 5 to 7% respectively. We believe that this is on account of the differentiated offerings that Sonata has. We've got our own proprietary technology called as Platformation, which we are using to have a digital transformation in our clients in our verticals of choice. Which are retail, distribution, travel, and ISV segment. So as we continue to move forward this message, we are finding a significant traction with the clients. We're having very interesting conversations. We added about 8 new clients in the last quarter, 4 of them coming in from Europe, 2 from US, and 2 from Asia. So overall, we are seeing far more interesting conversations, far more discussions with the clients, which we believe will help us in the top line. Therefore, obviously, the results could be good. We don't, as a matter of fact, give forecasts, but we believe that if we execute on this strategy, we should be having industry-beating growth. Rich?
And that could last for the next few years. I'm just trying to get a sense of whether the pipeline and the conversations give you confidence that what you've done in FY18, what you could do in FY19, could well have tailwinds for you to continue doing that for the next 3 or 4 years and not just till FY19?
Oh, sure, Neeraj. Because in fact, if you look at platformation, the approach that we are taking towards platformation or the digital transformation of our clients, now this is a long-term strategy. It is driven by the C-suite of the companies or our customers, and there needs to be an engagement and a purpose and a long-term plan. So once you embark on that kind of a journey, it is definitely not short term. It is definitely not 1 or 2 quarters. But if the strategy is executed well, if we get these kind of customers, in case the discussions go on, we start digital transformation. We believe that these will be long-term customers, sticky customers, and we need to execute this to be able to have this kind of performance.
Prasanna, as I understand, 50% of your long-term enterprise accounts are expected to come from the Microsoft Alliance accounts. Would these be pivots in you reaching these strong growth numbers? And part 2 of my question, therefore, would be that because you've got a large global player as your partner of sorts, would this mean slightly lower margins than what you otherwise would have gotten. It's great to get growth. Please don't misunderstand my question. I'm just trying to get a sense of whether it comes at a small cost, which I believe companies have to take at some point of time.
No, I don't think there's a question of smaller margins or anything on that front. See, our relationship with in the space of implementing solutions on Microsoft Dynamics, or we're involved in the Azure space, we're involved in the analytics space. So we have got offerings in the Microsoft stack across our verticals of choice, which includes distribution, retail. A lot of our IPs, we've got about 6 IPs, are all on Azure. So there is definitely a strong binding with Microsoft. Having said that, we believe that this partnership, our focus on Microsoft technologies, whether it be Dynamics on the CRM space, on the data analytics space, on the Azure, will help. It's a niche, it's a competency that we have got. We've executed significant projects on this in the retail space. So we believe that there is enough headroom for us to be able to maintain the growth. We also have an excellent relationship as one of the larger resellers of the Microsoft products and the platforms in India itself, which is our domestic part of the business. So yes, it is certainly an advantage for us. At the same time, as you mentioned, we don't think it's a disadvantage. It's a growing field. There's a lot of need for it. And again, as we said, we need to execute our strategy better.
Okay. Now, I know you mentioned you don't give guidance, and I won't press you for that, but I get a sense of what you would do in the year on the basis of what you said thus far. I just have one final question, and please correct me if I'm wrong here, but as I look at your EBIT margins within India, outside India, there's a significant difference. And I think from an investor's perspective, for an IT company, one of the key things that they expect the company to do at some point of time is move the next leg of the operational metrics. Now, you clearly shown that by the outside India EBIT margin performance that you've displayed quarter after quarter now, every quarter. What's the uptick, consolidated uptick that you foresee on your operational metrics 3 years out? Because I would presume that your international revenues as a pie of your overall revenues would probably only go up over the course of the next 3 years. So how does that impact the margin profile?
Sure, Neeraj. I mean, it's a great question, trying to look out 3 years out. So, if you look at this India component of the business, these margins traditionally have been lower, and, they are a component of the revenues. So we actually measure ourselves in the margins, in terms of the margins for the domestic business, and that will be measured in absolute terms. So we have shown a quarter-on-quarter increase in these margins also. Now, if you look at the platformation concept, even on the domestic clients, even on the India clients, there are value-added services that we are providing. It goes and spans a range of security. It manages licenses. It will manage implementations. It will be sale of our IPs within India. Now, all these kind of products and offerings that we are selling in India would have larger margins than what just pure reselling is. It includes, moving customers and clients to the cloud. All these components have larger margins, and so therefore, in absolute terms, we could see 3 years down the line significant uptick in the domestic business also. Now, as you consider both these businesses, overall, obviously, we would like the uptick to be there. Still too far out, but we got a strategy in place. We got a plan of action in place. We are talking to the clients. And so, yes, that's where aspirationally we will expect to be 3 years on the line. We will wait to play it out.
But you won't be able to give me a sense of what the number could look like? Ballpark estimate. That
would be very, very tough. I mean, today on our domestic front, we are roughly at about 26% margin. EBIT margin on a domestic business, it is varying between 3 to 5%. What I'm trying to say is that as you go ahead and you have the value-added services even on a domestic front of the business, that 3 to 5% would start to go up. Obviously, we need to execute it, and then when you blend it all together, it could increase. But at this point of time, no, Neeraj, unfortunately, I will not be able to guide or even if I give a guidance would not be the correct picture at this point of time.
Okay, maybe we'll talk to you at the end of quarter two. It promises to be a good year for you. It would be lovely to talk to you at the end of quarter two to see how the halfway mark has looked like for the current calendar. But Prasanna, great talking to you today. Thank you so much for taking the time out.
Thank you, Neeraj. Thank you. Take care.
That's Sonata Software. Fairly confident about how the business would look like. They mentioned that what they've done in FY18, there's no reason for them not to emulate that in FY19. Mind you, FY18 was an 18% growth year for Sonata Software. The markets have softened completely. Flat as flat can be, actually, not too soft. The Nifty Bank about 0.2% in the red. It's a wrap on this leg. Excuse me. It's a wrap on this leg of IndianOpen. Up next is the FNO Show.